I'm Neal Rosenberg. I'm the co-manager of Barron Growth Fund. I've been with the firm for 18 years and managing Barron Growth Fund along with Ron for the last 8. I would describe our investment process as iterative. We start by collecting all of the publicly available information that we can possibly find and use that to craft our initial hypothesis. We'll talk to customers, competitors, suppliers, and employees so that we can have a holistic understanding of a business. Ron and I work with our team of 44 analysts to do as much research on names that we've owned for 20 years or more as we do on names that we're considering adding to the portfolio today. When we're investing in companies for Barron Growth Fund, we look for a set of common characteristics. We're looking for businesses with large addressable markets, positive secular trends, high barriers to entry, and ideally recurring or at least visible revenue. We also look for businesses that have high margins and higher incremental margins, strong free cash flow conversion, and are led by best-in-class management teams. And we try to buy them at great prices. We manage risk in the portfolio from a fundamental perspective. Ron and I work closely with our team of 44 investment professionals to understand businesses at a granular level and understand the risks and opportunities. We are constantly doing due diligence on investments that we've owned for 20 years so that we can better anticipate or assess risks even before they may emerge. We also believe that owning businesses for a long period of time makes them inherently less risky. That's because we have more experience and more knowledge in assessing and viewing those businesses across economic cycles, across geopolitical cycles, across interest rate cycles. That allows us to appropriately manage those positions and allows us to anticipate how management may react to a change in its marketplace and how the stock may correspondingly react. We think in aggregate, the portfolio is concentrated and focused on unique, high-quality assets. That has led to a relatively low beta versus the market, relatively low earnings volatility, and therefore attractive compounded returns with less risk over the life of the fund. There are many advantages for investors looking to invest in a fund with a long-term track record. The fund is compounded at 12.3% annually, or 490 basis points ahead of the benchmark for 30 years. Second, we have a unique and differentiated long-term holding period that allows us to view the world from a different perspective. We think that that long-term holding period has been the source of our competitive advantage and the source of alpha over time. Finally, the fund is run by a very long tenured management team. Ron founded Barron Capital 42 years ago, and I have worked closely with Ron for the last 18 years. Barron Growth Fund has employed a consistent investment philosophy since its founding 30 years ago. We're looking for the best 30 or 35 or 40 stocks that we can find, independent of sector or subsector. We're looking for businesses and stocks that we believe can double over a 4 or 5 year period, and ideally double again over the subsequent 4 or 5 year period. Finally, we tend to hold stocks for the long term. We think this focus on the long term and our willingness to continue to allow stocks to appreciate as long as we believe our investment thesis is intact and we see a path to doubling our money over the subsequent years is the key to our long-term success. Our process is repeatable and scalable, and over the fund's 30-year life, our process has generated attractive returns while taking less risk.